Welcome to Sectors Up Close. I'm Elena Casas. Our topic today is investing in Indian equities, and my guest is Stephen Schoenfeld, CEO of MarketVector Indexes. India's economy and its stock markets are on a roll. Recently released official forecasts put GDP growth in the year to March at 7.3%, with 1/10 of the country's population escaping poverty in the 5 years to March 2021. Foreign investors, too, have seen returns grow. MSCI's India index rose about 20% in dollar terms over the past year. The country's stock market topped $4 trillion, helped by a 23% growth in corporate earnings. Well, that bodes well for Prime Minister Narendra Modi, whose BJP government will go to the polls in a general election slated to take place between April and May. Modi has taken steps to attract global companies, including Apple, to set up factories in India, allowing them to diversify away from China. But he has also maintained relations and trade with Russia, snubbing Western sanctions. So, will India continue to offer investors opportunity? Let's ask MarketVector's Stephen Schoenfeld. Stephen, hi. Let's start then with the election. Domestic stock markets have reacted well to BJP wins in state elections in recent years. So would you expect the win for Modi would be a big win for the market?
Yeah, the market expects a Modi win. The dominance of his BJP party is quite strong, and the tailwind of having delivered not everything he promised, but a very substantial amount of what he's promised over the last few years to the people means almost every expectation is that he would win, and the market is anticipating that.
Foreign investors in India, Stephen, are betting on an incredibly fast-growing market, as you said there, and a fast-growing middle class, where we've seen huge numbers of people pulled out of poverty in recent years. But 90% of people in India still make less than $300 a month. So is the middle class growing quickly enough? And is India finding enough jobs for all those people to keep the market growing at this rate?
Some of the job growth has been quite disappointing, and the government has compensated by having more basic income payments, which is not the optimal strategy for growth. However, the longer-term economic growth plans do have the potential to lift the lower income level up. And what investors need to remember is the middle class in India is getting steadily wealthier, and the size of the middle class in India is bigger than the population of the United States. So it's really an enormous opportunity.
The Indian market has already seen 8 consecutive years of gains, but is there a risk it's now overvalued? It has a PE ratio for the largest Indian ETF of 29, which is higher than the S&P 500.
So the blue chip Indian stocks are richly valued, driven primarily by domestic investors. And foreign investors are not fully in. In my opinion, the pivot away from China within emerging markets toward India is not even halfway done. The other factor is that Indian tech companies, especially those that are transforming India's digital economy, are still reasonably valued relative to global tech peers. So you have companies like Infosys, Tata, Reliance, all of these are constituents of our Digital India Index that are still good value considering the growth.
Let's talk then about your Digital India Index, which is tracked by VanEck's ETF of the same name. It's heavily concentrated, as you were saying, in tech. Why focus there?
So we believe in the broader Indian story, just as we talked. We believe in the potential of India. We talked about the election. This year, we have the Indian election and the US election. Those are the 2 largest democracies. So we believe in the macro story. But the fastest growing part of India is tech. Indian tech companies, especially tech service, are world leaders. Plus the opportunity to digitize India, which has been a combination of private sector technology, but government initiatives, including the controversial elimination of the gray economy. But now the economy, most Indians are using electronic payments. It's enormous. Of a country the size of India, you now have, for the first time, a single market. Previously, you had state governments with their own regulations. So now you have a country of 1.45 billion people that are acting as a single market, and digital transformation companies, software, hardware, e-commerce are going to really be able to grow in this space.
Stephen Schoenfeld of MarketVector Indexes, thank you so much for that insight. And that's your look at investing in Indian equities. I'm Elena Casas, and this is Reuters.